How is your Liberation Day going? I mean, you've been a proponent of the changes in the administration, right?
Let me pivot.
Yeah.
Let me pivot just a little bit. I think they were obviously, if people haven't seen it yet, they were fairly aggressive tariffs. Mm-hmm. It seems like Treasury Secretary Bessent said yesterday he encouraged people not to panic, meaning counterparties, other countries. He encouraged them not to panic and also not to retaliate. He says that in a way, I'm paraphrasing here, that the market is going to be able to digest what he called the ceiling. In other words, he's framing these tariffs as the worst that they can get. In the past, you've gotten a number from Trump, and then he might string it out, and you get a worse number. He's framing this as the ceiling, and with the hope of finding a floor. What I think that means, and what many people I think means, is over the next couple of weeks, the hope is that other countries come to the negotiating table, and that perhaps this sticker shock that we're seeing right now gets walked back. But I don't. Some part of me looks at what's happening right now in the market, Tony, and I look at Lululemon, getting chopped off by 26%, Nike down 13%.
Well,
United Airlines.
They've got a lot of factories that might be
everything
that are going to be. I mean, in Vietnam or whatever. I think Andrew just wrote that into me. 43% or something like 46% tariff with 130 factories and 450 workers is gonna hurt Nike with the tariffs.
Yeah, but I mean, go anywhere you want to. Sure. Go Caesars. Go Caesars, and they're down 14%. Go United Airlines. So wherever you see consumer discretionary income, disposable income, it's clear the market is getting a jump on what will likely be a squeeze to this consumer. We are already at relatively elevated price levels. Say what you will about the rate of change. So inflation is the rate of change of prices. I think everyone is still getting adjusted to these higher price levels where we've gotten to on a post-pandemic response. And you're going to go from what was really demand pull inflation to what's going to be likely cost push inflation, where this cost gets pushed down to the consumer, which is much more painful. And you're seeing a very different complexion to the market. Do I think we're going to have wide distribution here? Do I think there's opportunities to trade counter trend? Yes. I still think it's 5,500 plus or minus 300, and that's the way I'm still playing this range. Mm-hmm. I think 5,200, 5,300 might be an interesting value area. But I mean, even like today, you're down 4%. What are you going to bet that we're down another 3% by the end of today, or we hit the circuit breaker? I don't know. At some point, counter trend trading could get interesting. But I do think, if I had to be honest with you, Tony, I think this gets worse before it gets better. And every day this strings along is a day that producers are going to build these tariffs into their businesses. Mm-hmm. I think it's going to be tough, and I don't know that many people come to the negotiating table within this first 30 or 60 days, and I think the market is going to digest worst case scenario over the next couple of weeks, and we could see that value area 5,200 sooner rather than later. I think what's most interesting is the bond market is already telling you that the Fed told you a couple of weeks ago they're going to cut 50 basis points this year, and the bond market's already telling you they're going to need to cut 3 times before the end of the year. And the way bonds look, who knows, man? You could see, if you get a decent rally here, who knows? They could be pricing in 2.5% rates at some point in time, depending on how scary the growth outlook looks. I'm not saying we go straight there, but I do think like the worse the equities look, the worse consumption looks, the worse growth looks, the more easing that the bond market is pricing to rates. And I think that's really what I'm focused on. The interesting thing about the gold move, I'm sorry, I'm going all over the place, but the interesting thing about the gold move is the straddle was about $55 yesterday. So it is a pretty decent move today in gold, but it's not crazy. A death candle in gold would be like a 5% down day, which at 3,000 would be like 150 points down. So it's a decent move, 2% to the downside, but all things considered, A bad day in gold is a 5% ugly 150 point down candle. We're not there yet.
So if I'm listening to you, you kind of echo at least what I've been saying, and I think Nick too. You think we get a little bit of chop. You don't think we in the equity market. Again, I'm reading between your lines. You can say whatever you think. I think we're going to get a little bit of chop. Go ahead, Vic. You.
Go ahead.
No, you. I've had the mic all day.
Yeah, I think we'll probably get a little bit of chop. I'm not overly terrified, but I do think what probably is going to happen is we get into earnings season. Every CEO is going to completely kitchen sink the next quarter, which means analyst estimates have to come down, earnings have to come down, the multiple comes down, and that's probably a slow process. It was a slow moving train in 2022. I think people wanted to get to a quick bottom. When can I buy stocks? When can I buy stocks? When can I buy stocks? I'm not exactly sure that we're in that type of environment where you're going to get a nice V bottom. You get to buy Tesla at 260, and then you get to forget about this in 2 weeks. I don't think that's where we're at. I think this is a slow moving process where people just had a 20% year in the NASDAQ, and it takes some time to get away from that Pavlovian response of buy the dip, buy the dip, buy the dip, that we just fundamentally changed global trade terms yesterday. Mm-hmm. We took a massive gamble, and it could work. I know.
Well, it's going to be a short-term hurt. If it works, it's going to be a short-term hurt. I mean, I've got my research team sending me information, which is great. Andrew just came up with the Fed fund now. The Atlanta Fed, if you believe what they care about, sees GDP down around 1.5%, where they were looking at just a couple of months ago a positive 3.8%. So they're already starting to revise things, which kind of bothers me and kind of shows you what we, at least Tom and I, talk about. The market tells you what's going to go on in GDP in the future. The earnings tell you what's going to go on with GDP in the future. The Fed and everybody else doesn't know crap if you can move something 4% because of known tariffs that were going to come out. Victor, I'll give you the mic.
Yeah, I think bonds moving 2 points to the upside in the single day, and bonds moving from 115 up to 120 in a couple of days, that's telling you there's a growth concern. Mm-hmm. You don't really need the Fed or Atlanta GDP. You don't need any of those people to tell you the markets are concerned about growth when they buy up bonds 5 points in 2 sessions. So yeah, I agree with you 100%. I guess what the flip side to this is, I personally have a list of items that I want to get at cheaper prices. 1 month ago, you couldn't find anybody who would say anything negative about the marketplace. Everybody wanted to buy upside calls. And now nobody wants to. Now you're getting a discount. Now you're getting a discount. Stocks are more fairly valued. Do we have a wider distribution of the future? 100%. Do we have a lot of volatility and risk in future global trade? 100%. But, I think this game is about acquiring assets at attractive values, and when the risk to reward makes sense. And I think we probably got a lot more volatility to sort of work through the system. I think we probably have a lot more of this growth scare to sort of price through. And I think it's probably not going to end in a day or two, maybe not a week or two. This is probably going to take a couple months. But I do think if you're not thinking about assets that you want to acquire, and maybe even buying just a little bit here and there, like, what's the point of doing this? If you're going to wait for the all clear, I can promise you're not going to get a really attractive price on assets. If you're looking to acquire things when nobody wants to touch them, that's, you're going to get decent prices.
Hey, I think. Oh, I was going to ask you, Victor, because I thought that this was going to be a sort of nothing burger. I thought this would come in light, that this would be kind of a...
I was surprised too.
I was surprised because that's kind of how I think of Trump, is like, you jawbone and then you kind of just do nothing, and it's kind of a blow off for vol type event. You kind of just...
By the rumor, sell the news.
Yeah, yes, exactly. What do you think?
I think the surprise. Yeah, go ahead.
I was going to ask you, do you think this is going to get walked back? I mean, he's kind of walked back in the past. A lot of the things, it's come in strong arm and it ends up being this kind of nothing thing. You have all this talk about the calculation and how this came in of, back of the napkin type, okay, do this by 2.
Mark is telling you no right now.
Yeah, sure.
So what do you think? You think there's does vol not exploding right now? Does that tell you that, okay, people are kind of thinking that maybe that's still on the table of a walk back on some of the numbers, things, rhetoric?
So 2 things. I think the first thing is I was a bit surprised as well. 2 reasons. One, the markets hadn't really priced this in as a binary event coming into this week. You didn't really see a kink in the term structure in vol. So that's one. Maybe reflexively that was the problem. Maybe you wanted to see a lift in vol. You wanted to see a kink in volatility, which would have signaled that there was a reach for protection. And then reflexively, you don't get this puke to the downside because you had protection. Yep. And maybe looking back, the fact that nobody was worried about this is what creates the conditions to have complacency and then to get the puke because you don't have people that hold a decent amount of hedge to the downside. So that's one. Number 2, it's all conjecture at this point. Honestly, Nikki, I think the distribution is so wide because anything can happen at this point. You could get the biggest trading partners who come back to the table and say, I'm going to lower our tariffs. We're going to invest in the U.S. and open up shop, or we're not going to retaliate. You could see that in a sort of a de-escalation from trading partners. Or you could see the exact opposite. You could start to see people like, China, Japan, and Korea did the other day, where they group up and they throw on some retaliatory tariffs. And then what the market might perceive as a ceiling, maybe this admin needs to come back over the top on some retaliation. So I do think that it's a 50-50, man. I don't think we're just going to walk this back for no reason. I think we got to have some major trade partners come to the table and give them a reason to walk it back. But I have no idea, bro. Which means we're just playing poker.
Yeah.
You know what I mean? We're playing a distribution curve, and we got 27 VIX to play with.
You've been dealing with this tariff value-added tax now that you're in Singapore. Like a car in Singapore is like twice as expensive as anything in the U.S., correct?
Well, this is interesting. Yeah.
So you're going to get it's going to become cheaper for you, isn't it?
Well, no, not it could.
I mean, it's going to become cheaper around the world in other places.
Put it this way: there's no
like in Israel,
GMs
if they
or Chevys.
go ahead.
There's no GMs or Chevys on the streets here. I'll say it that way.
Okay.
So who knows?
Okay.
I've done a lot of traveling around Southeast Asia. I've done a lot of traveling in Europe. I don't know about you guys. I don't see a lot of GMs and Chevys in my travels, but maybe some part of this changes that in the future. I don't know. But yeah, they have a GST and a value-added tax here, and in a way, my interpretation of the tariffs are really just it's a flipped consumption tax. A previous administration gave out subsidies to, let's call them, favored companies, and this tariff seems like an inversion of that. Instead of the incentive, we're giving disincentives for certain behavior, and we'd be willing to lower the tariffs for our favored companies or favored nations, whatever the case may be. So to me, it's the same idea. It's just flipped. It still gives government central control, which is why you sort of see some libertarians like Rand Paul coming out and saying he's not really down with the whole idea of tariffs anyway, even though he's been supportive of the administration in some ways, because a libertarian would just want the free market, allow prices to float at whatever their natural price is, and let consumers benefit from cheap costs. But that's not what we're doing here.
Yeah. Agree there. Any rumor that these tariffs were to get you back into the U.S.? Hey, Vic, I asked this question to Nick earlier. I mean, we've had a huge move overnight in just about every product. Even volatility is staying bid today. No capitulation back, as we talked about, at least on this show, going into the first half hour of the market being open here. Volatility has not contracted at all. Not surprising to at least Nick and I when we were talking. Even the S&Ps have had a very tight range since we've opened.
Yeah.
Do you think this is it and we kind of digest from here and maybe we chop lower, maybe we chop higher and we have a trading market in here with some high implied volatility for an extended period of time? And that's kind of what I'm feeling like. I'm kind of feeling like,
No.
The people. Okay, go ahead. What do you feel?
No, but like if vol wasn't so expensive, like a zero DTE upside bet to me, as long as I could get it relatively cheaply right now and not pay through the nose in vol, to me it's like we're already down 4%. Why not take a cheap flyer that this cuts in half?
You got a $60. You got a $60 expected move. There is nothing cheap, Victor.
Yeah,
SPX 54.
I don't know
54.65. You go 100 points out of the money on the calls. They're trading $4.70. You go 100 points out of the money on the puts. They're trading for around $3.60. You actually have call skew in SPX. There ain't nothing cheap, Vic. It's all expensive.
I get it.
There ain't no cheap shot. That's in the 0 day.
What is maybe cheap on a relative, I don't call it cheap. Mm-hmm. What I find interesting today is Bitcoin, because I was told that this was a highly correlated instrument to the NASDAQ. NASDAQ gets punched in the face by 4%, and I look at Bitcoin and it's kind of yawning in this volatility, especially on a day where you get gold down 2%, silver's getting smacked up. And I think, we've seen volatility throughout the NASDAQ for several weeks now, and Bitcoin has held this super tight range between 80 and 90. And I can't help but think that the inevitability, regardless of if we see a recession, we see a slowdown, we all know what happens. We all know how we end up dealing with our types of problems. Mm-hmm. And if that impulse is there at the end, then figure out a way to protect your purchasing power from a Federal Reserve or fiscal authority that's going to need to increase spending or increase the monetary base in order to deal with slowing growth. To me, that's the challenge here. On one end, you want to protect your purchasing power, but you can't be in cash, because if they do this gigantic print, you're going to get murdered and you're going to get left behind. Yeah. And that's the challenge, I think, for every investor right now.
I'll give you another odd thing.
Stagflation.
It was just funny that Data wrote into me and said one of the few stocks that's up today is First Solar, up $10 and change. I know, Nick, you've played this from the upside. Kind of odd, right? When you've got every electrical vehicle getting hammered, you've got oil going lower. Why would a First Solar go higher?
I was looking at J&J too. They have like a $10 billion lawsuit or something like that on the table.
It's up bucks and change.
Yeah, it had $10 move to the downside. It's now up today.
Yeah. Hey, you mentioned consumer staples for a moment. I'm going to put up a slide here, Victor, to support what you were saying here. Only XLP is up big. Here, they can put up for you if we can. That last slide from Data. There you go. There's the consumer staples over the last week, month, and year.
Telling you everything you need to know right here. Yeah. We're going to be buying Pepsi, smoking cigarettes, eating some junk food from Mondelez.
Forget about Wagovi or whatever it is.
Yeah.
Mm-hmm.
This is kind of like, it's kind of in lockstep with the Dow. The Dow's kind of outperformed on a relative basis over the last couple of weeks. And I think this is all I'm an advisor and I gotta get paid. So like if I'm an advisor and I'm in a difficult environment with high volatility, I can't take you to cash, Tony, because I'm paying you 2% and you're sitting in cash.
Sure.
So all these people in periods of high volatility, they just go to low volatility assets.
Yeah.
So you'll see a bid in stuff like healthcare, you'll see a bid in stuff like staples, and it's not because these are great companies that are necessarily going to weather a downturn. It's just because they have low vol, they're low beta assets, and so somebody can hide out in these things and still get their 2% by showing value to their, to whoever they're managing money for.
You got it, my man. Well, good job out of you, Victor. I'm not going to keep you any longer. I am going to ask you to call us back, not you, Victor, our viewers, 855-238-2789 or 855 be tasty. That gentleman from Israel hung up again. If you call back, I'll try to get you to the top of the list. I really do apologize. It's not a conspiracy theory. We don't have any of those here. We're an open book. You can see everything we do on the follow page. Victor, thank you so much for your time, my friend. It was great to hear from you. If your words aren't the voice of reason, your calm demeanor is. So thank you so much for being that rock today.
Man, scoop a little bit, you big scaredy cats. Are we going down? Yes, but find an asset that you like, and don't sit there paralyzed, curled up in the fetal position under your desk. Live a little bit, especially if you're under 30. If you're under 30 and you're terrified, watching all the news about tariffs, and you don't know what to do, and you're freaking out, you're doing it wrong. You are doing it wrong.
Zoom out on that chart.
It reminds me of a joke, Victor. I'm gonna butcher it a little bit, but my older friends will remember it from days gone by, and I haven't said it for a long time. There were two bulls on the top of the mountain, and down at the bottom of the mountain were a bunch of cows.
Heifers?
Heifers. Down at the bottom.
All right.
And it's the two bulls. One's older. And one's a little bit younger, but he's in the spirit looking to take over the whole thing from the other bull who's been around for a long time. And the young bull says to the little cat, to the older bull, "Let's run down there and have our way with those calves." And the old bull,
the heifers, calves are babies.
Heifers, sorry, with the heifers.
I mean, what the? Yeah, let's go get that. Those babies are looking hot.
I said I was going to butcher it. And the old bull says, "Let's walk down there and have our way with all of them." You see, Victor, you got to watch volatility. Volatility hasn't moved at all to the downside. Wow. It's up 11.5% after being up 7-8%. So everything's getting a little bit softer and everything's getting a little bit fatter with premium. Watch volatility before you run down there. Let's just walk down there and have our way with everything.